Thanks for tuning in to Look at My JPEG, the podcast that discusses NFT, DeFi, and NFT financialization. This is your host, Xerox Jose, the founder of NFTperp. The reason why I want to do this podcast is because there's just not enough people talking about NFT financializations. In this podcast, you can expect us to invite guests that are builders, founders, even investors that are deep in the NFT financialization space. We'll discuss their story, what they're building, and how you can get involved. So thanks for tuning in.
Welcome to episode 29 with Upshot. Upshot is an NFT analytics protocol. With NFTs and DeFi colliding and unlocking new financial innovation, Upshot aims to build financial applications that aims to help unique trading tools, lending strategies, NFT indices, and perpetuals in this space. With a whole suite of products, Upshot is unlocking new ways for people to interact with NFT financial markets. This 1 hour episode is jam-packed with goodies. We hope you enjoyed this episode as much as I did.
Good morning, Nick. Welcome to the show.
Hey, how's it going? Thanks for having me.
Yeah, it's going well. Thank you. Hope you're having a nice Friday. Thanks for kind of coming on. I can't believe this is the first time we've had you on our podcast.
I know. Yeah, I feel like we've known each other for a while, but it's better late than never. This will be fun.
Yeah, exactly. I'm very excited to dive into what we're going to talk about today. Hopefully, we get a little bit more attendance. But as always, these are recorded and will be uploaded to our Spotify account later on and repurposed into different blog posts so we can share later on. But yeah, for those that are tuning in live, thank you for coming on. This episode, we have the CEO of Upshot. His name is Nick, and I'm incredibly excited to kind of dive into today's episode because there's a lot to cover. With Upshot, they have done a lot in the NFT finance space when NFT finance wasn't really a thing. Probably over 2 years ago. So a lot has changed since they first launched. They have a ton of different products and features that we're going to dive into today. But yeah, without further ado, let's welcome Nick. Nick, give us a quick intro of yourself. Maybe share how did you get into crypto and what was your first NFT purchase?
Yeah, thanks for having me. How I got into crypto, I don't know. It's been a while. I've been in it since like kind of 2015-ish or something like that. And then before Upshot, I was leading crypto at John Hancock and Manulife, large kind of asset manager and insurance company. We were doing a bunch of research around kind of pricing esoteric assets, in particular risk, and kind of building decentralized systems or researching decentralized systems for kind of non-parametric risk mitigation and insurance. And then I started Upshot, and my first NFT purchase, that's a tough one. I think it was probably a crypto kitty. Yeah, probably that was the first one back at the end of 2017.
That's an early one. CryptoKitties, for those that maybe don't have the context, is, I believe, one of the first Ethereum app that broke the chain. And by broke the chain, I mean people started realizing, oh wait, this thing may not be as scalable as we think to be. And I think it spun off a lot of different projects working on the layer twos. Yeah, that's a good one. CryptoKitties. Do you still hold it?
You probably. I don't think it's worth moving around. What was your first?
Good question. My first NFT purchase was these are called ASIC punks. I'm not sure if you know them.
I don't.
Yeah. I don't know if I'm pronouncing it correctly, but it's ASCII. These punks are stored entirely on chain, and they're 12 by 12 lines of essentially just like lines of code almost. It's like a text. It's like AC text generated entirely on chain, so you don't have the typical mint an NFT and have this NFT point its metadata to a IPFS storage compartment, and point to an image. It's actually just entirely on chain. This was showed to me by Mark Weinstein from Mechanism Capital about 2-3 years ago.
Nice. Yeah, mutual friend. Yeah, these look pretty cool.
Yeah. Oh, wait, Mechanism Capital is one of the investors in Upshot, right?
Yeah, that's right. Yeah.
Yeah, there you go. Yeah, these are great. I have a couple of them, and I'm just holding it for the culture. All right, so let's talk about Upshot. I first came across Upshot, I believe, at the beginning of 2022, maybe at the end of 2021. And at the time, Upshot's sort of headline was, this is a crowdsource NFT appraisal platform. So obviously a lot has changed. To give us a quick introduction, maybe the origin story of how Upshot came out, and a quick TLDR on what you guys been iterating over the last year or two.
Sure. Yeah. So like the tagline for Upshot is financial infrastructure for NFTs. That's what we're building generally. When we started Upshot, we were coming from John Hancock, this kind of insurance context, and so Upshot was actually built around kind of infrastructure for I guess like achieving subjective consensus or incentivizing decentralized actors to reach agreement to the answers to subjective questions using a pretty new field of mechanism design called peer prediction that leverages information theory and mechanism design to attempt to elicit kind of honest answers from people when a ground truth either doesn't exist or is inaccessible. And around July of 2020, we were thinking about kind of what the proper go-to-market for this type of mechanism was. Insurance is like a fairly complicated industry. Also, the timing didn't feel right to bring the type of insurance product we were thinking about to market in the crypto space. And so we were thinking of other applications of it. And what seemed really compelling at the time was using this crowdsourced technology to incentivize people to kind of weigh in on the value of NFTs. NFTs are non-fungible, low-velocity assets. They don't change hands very often. And so it's useful to have a kind of mechanism outside of open market interactions for pricing them. This is similar to kind of real estate, physical art, other non-fungible, low-velocity assets, leveraging kind of appraisals in their price discovery. And so the first iteration of kind of the Upshot appraisal platform was a crowdsourced one. It kind of felt like hot or not for NFTs. People would show up to the app. They'd be shown 2 NFTs and weigh in on which one's more valuable, or given an NFT and a range of prices, weigh in on kind of how valuable that NFT is. For a number of reasons, we decided to move away from kind of human crowdsourced appraisals. It's not very scalable. It's not super accurate, and move towards ML powered appraisals. So for the past 2-ish years, we've been building several iterations of our own kind of ML models for pricing NFTs. They're quite robust now. We're pricing north of 87,000 collections right now on a kind of sub-hourly cadence. So every NFT within those collections is getting a kind of distinct individualized price as a result of these models on a regular basis. And the kind of motivation for doing this was that if we can produce some reliable price feed for NFTs, we start to open up this design space for interesting financial primitives that can be built around NFTs. Start to kind of realize this vision of a bridge between DeFi and NFTs. So that's what we're doing now with a fairly robust kind of pricing layer, starting to move up the stack and powering and building kind of novel primitives at this intersection.
Yeah, thanks for covering like sort of the iteration process and where you guys landed now. So for those that are listening, there's a bunch of things that Upshot since they've pivoted and to their different model and a number of different suite of products that they've created. And it comes back, a lot of it comes back to the infrastructure they've built, which is the appraisal model. Um, and that have also grown horizontally as well in terms of how they're appraising individual NFTs and collection NFT and index, a number of collections of NFT evaluations, which we'll dive into in details today. So there's a couple of things. Like I think the first. I believe like the first product you guys have been really pushing a lot is your API, right? And that's sort of the picks and shuffles, if you will, for NFT finance protocols, whoever is building NFT tooling, marketplaces, portfolio apps, a lot of different apps, if you will, are utilizing your API. So give us a quick overview of what Upshot API does and how it benefits different projects that are using your infrastructure.
Yeah, so there's a kind of growing number of features in the API. We've branched beyond solely appraisals to kind of expose other quant or ML kind of analyses or metrics that we've been generating. But at the core of the API is that appraisal feature, producing these price points for NFTs, aggregating that up to portfolio valuations or kind of I guess like more useful valuations at the collection level across like different tranches of NFTs, what have you. So a lot of the value that people are getting from the API right now is related to those appraisals. It's useful for portfolio trackers in displaying kind of real-time valuations of people's portfolios, wallets for showcasing similar data. It's useful for kind of implementing deal finding features or kind of useful information within marketplaces as people are kind of interacting with NFT spot markets, showcasing kind of the estimated true value of an NFT, moving beyond just floor, and using that as a means of kind of finding deals in the market. There's value across a number of verticals. There's a pretty wide range of applicable categories for that appraisal data and data that is derived by that appraisal data. And now what we're doing a lot of as well is I guess, for lack of a better term, oracleizing our data. So now kind of exposing that data in a more consumable way on chain to more directly influence kind of on chain NFT protocols, perpetuals, lending protocols, AMMs, things like that.
Yeah, so a lot to unpack here, but I guess like, the interesting thing for the listeners to know is like what makes an NFT appraisal, value accurate. Like, how do you determine when a price of an asset should be moving up, should be moving down? Do sales affected? Do floor price affected? What comes to when it comes to appraising these different NFTs and individual assets that, like you said, like they turn over different hands relatively low. Like it doesn't exchange hands very often. So, what is the pillars, if you will, in terms of appraising these different values?
Sure. Yeah. So we have a useful device in many NFTs today in that of kind of traits and different combinations of traits. And so that's a lot of what the models focus on is moving one layer up from an abstraction point of view to analyzing traits in useful ways. So trying to derive some notion of relative value amongst traits and then analyzing kind of market activity at the trait level. So saying, for example, 3D glasses are generally trading above vapes or what have you, just picking arbitrary traits. And then we can start to walk back what the value of assets with those traits or different combinations of traits are relative to others. So starting to use traits as a means of kind of inferring value from maybe higher volume or more active parts of a collection. And then you use these traits to examine kind of market activity, soft market activity, for lack of a better term, kind of order book data, kind of social sentiment data, community analyses, both on-chain communities, how different wallets are related to each other, how they tend to interact with various collections, what kind of the entry of wallets into a position mean generally for the appreciation or depreciation of the assets within that collection. A number of different things. It's like quite a large set of data points. And then after we produce these valuations, we're assessing the accuracy by essentially taking this time series of appraisals that we're producing, overlaying it, or kind of analyzing it relative to the actual sales that happened on the market. And for each data point saying, this was our appraisal, what was the closest sale to that appraisal, what was our margin of error? And so we're assessing it at kind of three levels. One, on the median, half the time we're off by this amount, and generally there we're kind of in the low single digits of margin of error for the kind of more liquid collections or more accurate collections. But then we're also assessing accuracy at the tail, so the 90th percentile and the 95th percentile, because it's important to see how the models perform for these assets that really don't change hands very often. The grails of collections is generally where a lot of models tend to degrade significantly. And so that's been an important kind of area of focus for us in improving these models and iterating, is making sure that that's where we're seeing significant improvement in the accuracy of the really low velocity parts of a collection, the ones that tend to have a significantly different kind of value profile than the floors or the majority of assets.
That's really interesting. And currently, how many NFT collections do you guys appraise?
I think we're north of 87,000 right now, but we've made some improvements to, I guess, just the infrastructure of the models and how they operate, such that the time between when a collection is kind of born to when it's integrated into our model flow and is being appraised is quite low. So we're onboarding new collections very frequently.
Do you mind if I ask, how low is that? Like, let's say some degen somewhere in their basement created a really interesting NFT collection, launched it, it was a free mint, and then within 24 hours, it got 1,000 ETH of transactions. How quick do you guys pick up on these on these new NFT mints? It's incredibly hard to index all of these different new contract mints, right?
Yeah, it's also it's not as useful immediately after mint. We're working to improve kind of the like viability of the models relative to I guess the age of data. You need data to kind of infer the value of the assets in it. So it's actually useful to wait a few days, maybe a week or a week plus before actually onboarding a collection into the model flow. But I'd say that's around the time frame. Give it 3 days to a week before like there's sufficient data to even start to infer some valuation, and then start to I guess see how the model performs, and then expose that those valuations on prod.
That's interesting. And I'm curious, like different NFT collections, different traits, I would assume like with the models that you guys have in terms of identifying high value traits and giving them higher valuations because it has that trade or rarity. Do different NFT collections have overlaps on how traits perform? Like, let's say, for example, I don't know, like for the Bored Apes, the golden fur tend to have a much higher valuation, just like the punks, like the zombie ones are more expensive. For Azuki, you have the spirit ones, those are high grail. With different PFP, and we're strictly speaking PFPs, right? Like, do these interesting traits, because of rarity or because of the design, the look of it, like it looks really, really good. Therefore, across collections, when you guys are appraising, these sort of overlaps a little bit. Like, do you consider desirability being a factor here? And a lot of times, like desirability is not represented in metadata in trades. Like for take an example, I'm not sure. You and I had a pretty funny conversation like a couple months ago about the crypto dick butts, and what you told me is a clean dick is a good dick,
You need
right?
a clean dick. You need a clean dick. You don't want a sloppy dick.
Right. So my point is like I guess like a clean dick would literally means it has like the least traits because it's a naked, you know. But on the metadata side, like, is there a such trade called a naked dick, or or it's just like, yeah, how do you even determine
Yeah,
that?
this is a great point. So a lot of what we do in sort of the pre-processing of our data, like before the data hits the models, is attempting to identify these meaningful or influential meta traits, as they're called, these traits that aren't explicitly defined in the metadata, but do have some influence over how people value these assets or price these assets. So that's a kind of iterative task. Some things are easy to identify, like these number of traits. Identifying a clean dick versus a sloppy dick based on the number of traits different dicks have is an easier task. Identifying a general kind of in doodles, for example, like a general hoodie instead of like a gray or a green or a blue hoodie is quite simple. But starting there's kind of within the dick butt example, there's a third type of dick outside of clean and crazy. Crazy used synonymously with sloppy in that of cohesive dicks. Dicks whose traits are kind of cohesive or coherent. They go together based on kind of like cultural familiarity or mimetic familiarity. And so identifying these combinations of traits that then can be kind of turned into meta traits is often a more difficult thing. This is something we're consistently improving. This is something that we may explore kind of injecting crowdsourced input and in part of the flow to help identify more scalably. Different communities of collections have a better sense of the traits that that are valued within the collection, or aspects of NFTs that aren't explicitly defined in the metadata that do have some sort of influence over the price. And so that's something we're consistently improving. But that sort of meta trait identification is an important part of kind of like valuing collections and valuing NFTs in general. And then with that, you can then use those to examine or analyze market activity around. So you're still analyzing the same types of activity, sales, order book, things like that, but now you have a kind of expanded suite of data points in these meta traits to analyze that data with.
Yeah, that's incredibly interesting. Yeah, I think at the end of the day, like we're talking about art here, right? And with art, it's difficult to have it 100% nailed down with computer logic. Like in a way, code can be expressed with just logics. Like if you train it to identify certain traits and rarity and volume and all that, you can project out value for specific NFTs. But at the end of the day, there's that component of perception of how people perceive aesthetics, what's aesthetically pleasing to human eye, and you kind of need that human touch in a way to fine tune those meta traits.
Yeah, definitely. I think this is an interesting use case for LLMs or stuff like that as well. Like pointing a sort of natural language model at NFT data as a means of kind of augmenting how one is able to identify like the full suite of meta traits is interesting. We also have access to kind of the greatest source of truth that exists in that of market activity. And so if you were to look back at a collection's kind of sales activity, it's not impossible to start to identify some correlations between different assets trading within different bands and try to infer meta traits just looking backwards at how kind of sales are happening across different assets in a collection.
Yeah, I wonder how AI, like Chat GPT or like Mid Journey, these different sort of artificial intelligence, like have a bit of a consciousness, could eventually identify these sort of different meta traits and help shape out different algorithms. Yeah, this is incredibly interesting. Moving on, so besides the API appraisal, which is sort of the I would consider the bread and butter of Upshot, you have a suite of products that have come out, which I find very very useful. There's an aggregator on your DApp, so someone can go connect their wallet and review and trade NFTs across multiple marketplaces. In combination with your appraisal, right on the screen, and that's really helpful. So, how many marketplaces have you guys integrated so far? What's that process like? Is it pretty easy for people to trade? And is this like one of the first B2C product you guys have brought to the customers?
Yeah, so the aggregator has pretty expansive coverage. We use a number of additional data providers as well as our own kind of indexing infrastructure. So we have robust coverage in the space, and that the aggregator has more so been built as kind of like a proof of concept of how appraisals can be integrated into like various market flows or kind of spot market tools. I would say that is the kind of first B2C product we brought to market with these appraisals, but now a lot of our focus is around kind of moving up the DeFi X NFT stack to bring interesting products in these derivative markets. So we're going to be launching lending strategies we've built on top of our models alongside Astaria in the next week or two. We've been doing a bit of work in constructing NFT indexes on top of our NFT appraisals as a means of tracking the market in more interesting ways and giving this as kind of useful data points for analyzing at various parts of the NFT market, but also as a means of potentially possibly like there could be integrations here with nftperp of kind of giving synthetic exposure to kind of baskets of the market or different indexes in the market on top of these kind of index price feeds, as opposed to just synthetic exposure to specific collections. We've been doing some interesting things in kind of the like spot market world of around like on-chain NFT liquidity, interesting integrations with like NFT AMMs and work there. So that's been a lot of our focus. We have this kind of generally useful tool in now wide coverage, accurate, reliable NFT price feeds powered by appraisals, and now trying to realize this robust kind of world of different products within the, I guess, like NFT derivative markets or NFT X DeFi markets.
NFT X DeFi market is sort of the whole reason why we exist in the first place, and I'm glad we're kind of pivoting our conversation to this part. So how does Upshot appraisal and API and tools help lending and borrowing from, I guess, from a lender's perspective, from a borrower's perspective? What drove you guys to work with Astaria, and what are the insights you can share?
Sure, yeah. So I mean, at the core of a loan, it's important to understand the value of the asset when determining kind of the interest rate that you're going to quote in the loan terms, when determining a kind of safe LTV. Also, in offering loans to larger parts of a collection, this isn't a problem in peer-to-peer networks, but a lot of peer-to-pool platforms have kind of been restricted to offering loan liquidity towards the floor. So there's a lot of different ways to use appraisals in the lending process. We're going to be acting as a kind of strategist, as it's called in the Astaria system. So Astaria has a kind of new take on the peer-to-peer system. It's difficult to say which kind of paradigm the Astaria system is closer to in peer-to-peer or peer-to-pool, but essentially Astaria works via decoupling lenders and capital providers. So now you can have liquidity providers or capital providers that are not actually generating the terms themselves. They deposit into vaults that are kind of managed by different strategists who are performing the kind of logic to produce loan terms that borrowers can then accept. And so we'll be a strategist in this system. And you use appraisals in various ways, as I mentioned, in the lending process. One of the more important kind of integrations of appraisals into lending, though, is starting to predict from what the price today is to what the price X days in the future is going to be. This notion of a recovery rate, X days in the future, what could I realize for this NFT? What is the value of it? Because this is kind of what influences or governs the proper terms that one should generate for a loan. So that's a lot of what has been built on top of the appraisals and kind of getting our models prepared for the lending markets. Lending in the NFT world is not lending by name or in expectation as it exists in I guess traditional markets. They're much more like options markets, and in options markets, it's more important than anything to be able to predict the value of something in the future when generating the terms for an instrument or a position. And so that's a lot of what has gone into adapting our appraisals for lending markets and sort of the active role we'll be playing in those lending markets with Astaria.
So walk me through a Astaria pool that's allowing people to add a liquidity in, be an LP, and Upshot is a strategist of this vault where borrowers can come in and borrow different capital on their assets. Would the vault look like this, where, hey, there's a bunch of liquidity here and we're accepting all Azukis and we're giving LTV at a certain rate, and this is the interest rate you should be paying. Do you have like a standard rate for all Azukis, or do rarity come into play here based on your appraisal? How does that work?
Yeah, so how it works kind of technically is people deposit capital into our vault. We now have a pool of capital that we can use to lend to borrowers. And what we're doing is every 30 minutes, publishing a new Merkle tree with a large number of loan terms, so individual loan terms for many different NFTs from the collections that we're supporting loans for, and people can track these kind of constantly updating terms. When they see a term that's favorable to them, take this term to the system and accept it autonomously against the capital in the vault. So every term that we're producing is individual to a specific NFT, and it's largely taking into account what the appraisal is, and then further kind of what the recovery rate is for the length of this term. For example, if we're offering 7-day loans on Azukis, then we're using the kind of predicted appraisal, this look-ahead appraisal recovery rate 7 days from now to influence how much capital can be taken out against that Azuki, at what interest rate, et cetera. And we're also taking into account things like the current construction of the vault's portfolio, like general directional kind of sentiment in the market and things like that to try to produce the most kind of capital efficient, risk mitigated loan portfolio that we can.
So if I'm hearing this correctly, you could have a vault where you're accepting all Azukis, all 10,000 of them, and each one of them could have different valuations depending on who is borrowing.
Correct. Not depending on who's borrowing, but depending on the asset, because it's important to think of NFT lending as more of like an options operation as opposed to a traditional lending operation. And so it's really about, given this asset, where do we think the price is going to be at the end of this term? We assume some rational actor is going to be taking out a loan, in that if the value drops below the size of the credit line they've taken out against the NFT, they're going to default. And if it's not, then it's profitable for them to not default. And so with that sort of assumption in mind, which I think is a fairly sound assumption, we can then start to produce individualized loan terms for any asset we support. I think at launch, we've decided to support 11 different collections. and we'll be producing terms for every NFT within those 11 collections.
Yeah, that's incredibly powerful. For those that are listening, as it currently stands, you have really 3 to 4 types of different lending and borrowing protocols out there. You have the traditional peer-to-peer protocol, that's like NFTFi, where it requires a good amount of manual work on each lender's appetite on what they're willing to offer for a specific NFT, or collection of NFTs, what they're able to offer on LTV, what they're able to offer on interest rates, and loan duration. And it comes down to a relatively manual process, I would say, unless you have a decent SDK and you're a developer and you can automate that process. And this is peer-to-peer, so it takes time to for lenders and borrowers to come to term for a loan to be originated. Now, on the other hand, if you are looking to get instant liquidity on your NFT, you could go to BendDAO, where you have a Oracle-defined valuation for all the NFTs in a single collection based on the floor prices. So you're missing out a lot if you have a higher rarity NFT, higher value. That's multiple times more than the floor price of an NFT. The upside is you can get instant liquidity, but you have the risk of liquidation if you don't pay back your loan before the health factor goes below a place where it can be liquidated. You lose out on your NFT. And then you have protocols that are sort of in between. You have the MetaStreet V2 that's coming out. You have Sodium, which is a similar-ish protocol compared to Astaria. You have a instant liquidity, but it factors in individual terms for NFTs as well. So I guess the other NFT lending and borrowing protocol that we shouldn't forget mentioning will be Blend, and love to get your take on what you think of Blend so far. But I just want to make sure this doesn't go unnoticed. Like it's incredibly powerful to have a instant liquidity pool to allow borrowers to borrow on assets on their NFTs with individualized appraisals for every NFTs in their collection and instant liquidity. So I'm super excited to see Astaria launched and to see you guys operate Vault on there. I would definitely be checking it out and taking out loan and try out different terms against it. Yeah, but I would love to also hear what your thoughts on Blend is so far, what you've seen.
Yeah, I think Blend has been like a really positive thing for the NFT lending space. I think Blend is a good example of one of these like higher touch paradigms for NFT lending. You're able to achieve a greater level of capital efficiency. You're able to provide terms along kind of larger swaths of a collection, which I think is important. One kind of important, I think, shortcoming to acknowledge with these peer-to-pool systems is sort of being restricted to the floor for loans. You can take out a loan against a Grail, but it's being valued as if it's at the floor. You have a single oracle, a single price feed, and so there's a lot of capital left on the table. And these are non-fungible assets. It's important to be able to take out loans in a kind of individualized fashion. And Blend solves a lot of these things, or in being a peer-to-peer system, is able to achieve a certain level of capital efficiency. And so I think it's been a positive thing. It's brought a lot of capital into the space, and it's just a matter of having a market that's able to support these kinds of sophisticated actors that are able to produce loans in those high-touch peer-to-peer environments. I think what's interesting about Astaria and what a paradigm I think we'll likely see adapted to other platforms, Blend included, is it sort of decouples capital provision from lending operations or lending skill sets. And so you're able to aggregate a far larger pool of capital on the lending side to then be deployed by a smaller set of sophisticated actors or specialized actors, actually kind of generating those terms and performing the logic that goes into generating terms. And so I think we'll start to see a lot of these types of actors or kind of pools of capital start to emerge and deploy capital in Blend and other peer-to-peer systems as well. We'll see these kind of superimposed kind of DAOs deploying in these higher touch environments over time as the interested capital grows to a far larger size than the, I guess, number of specialized actors that can actually perform the logic behind the lending itself.
I just kind of realized, does Blend actually offer higher LTV loan for Grail NFTs?
Maybe not in the existing one. It's something I'd have to look into, but theoretically it should in kind of being a more peer-to-peer, higher touch system, right?
I would assume so,
Yeah.
but I'm actually on their UI right now, just multitasking. I don't see an option to jack up the max borrow amount in terms of LTV for specific NFTs.
Yeah, that's interesting.
That are rare. Yeah, maybe it's through their API or their docs you can do it. But actually, I don't see a way to lend against specific collateral as a standing offer. It seems like it's mostly collection offer.
Interesting. That's probably a smart product decision to make initially, just to aggregate as much liquidity as possible for these lending markets. But yeah, I don't think there's anything kind of mechanically restricting them from supporting that in the future at the product level.
Yeah, well, that's the thing, right? To do that, you would have to have, and to do it in a permissionless way, you have to have an oracle that does the appraisal in a way, or allow a completely peer-to-peer model where it's very granular, allowing lenders to specify which collateral token IDs they accept for the loans that they offer. But yeah, this is quite interesting. Okay, we've covered a ton. I do have a few more questions with Upshot. I think the GMI score you guys have on the front end is very, very fun, very interesting. We can dive into a little bit more about indexes as well. So GMI, is it just a gimmick? Is this a fun thing? Or are you guys doing something like actually integrating with your lending or other stuff with it?
Yeah, we leverage GMI across a lot of our other models. GMI, for just some context, is this score that we've generated for wallets to essentially try to predict how likely they are to make it, but like as a kind of more accurately, just a score to assess the general success of various wallets or collectors that trade NFTs. And this is important in kind of pricing NFTs because a lot of the value is derived by kind of the holder base of various collections. And so when pricing NFTs, when pricing kind of assets within a collection, it's important to know the sort of caliber of holders of those assets. And that's what GMI is meant to be, this kind of abstraction for.
Really interesting. So what you're saying is somewhere along the line of if a NFT collection is held by more not going to make it wallets, you need to be more conservative with this valuation.
Yeah. It's a feature in a model that has many features, but it is an important one. It's important to do these kinds of wallet level or community level analytics. NFTs, especially like as they exist today, these PFPs are largely experiments of kind of community building, online community building. And so the caliber of the community matters quite heavily when trying to determine if the price of a collection is going to go up or down, or what the price of the assets within a collection is.
So maybe a long shot here, but how do you guys think about incorporating that with your strategy, with your pools on Australia or any other lenders? Like, should lenders be thinking about who are they lending to, and do they have a high chance of returning capital and paying their interest?
It's more used in pricing the assets and influencing the valuations. I think it's a fool's errand to a degree to look too heavily at who you're lending to. Maybe this like isn't as applicable at the extremes. Like if there is a wallet that is consistently defaulting, then maybe that is some indication that they're going to default in the future. But spinning up new identities and new wallets is so trivial. Oftentimes that's not that effective, and also these loans are being taken out as largely as either means of leveraging or hedging. And what matters much more for determining the likelihood of a default is whether or not the price is going to fall below the credit line that has been taken out against that NFT. Like the value of the NFT is going to fall below that. If that happens, makes sense for people to default, and if it doesn't, then it makes sense for people to pay back their loan. And so often that's the kind of sole thing you should be looking at when thinking about kind of loan terms and NFT lending.
Yeah, there's a lot of different factors in there. That makes sense. All right, well, last thing I want to talk about, and this is one I'm pretty excited about, is the indexes. So you guys have created indexes. I think you published it about a month ago, and you and I had a private, lengthy chat about it. Give us a quick overview of why indexes, why you guys are building this, and how do you see it fit into the NFT finance ecosystem in the near future?
Yeah, I think indexes are just a powerful instrument for tracking different financial markets. NFT indexes are important for tracking different parts of the NFT market, and later kind of getting exposure to different parts of the NFT market. It's interesting to buy assets from a specific collection or to kind of enter positions in different collections, but oftentimes you're left then building a portfolio of kind of desired exposure or managing this portfolio. And indexes are a useful instrument used in traditional financial markets, can be used usefully in NFT markets to abstract away that need for active management when getting exposure to these markets. And I think one of the more compelling kind of uses of these indexes is in integration with kind of like synthetic instruments in the NFT space, like perpetuals, to give people kind of synthetic access to different baskets of exposure within the NFT space. It'd be quite easy to start tracking the kind of basket of Yuga NFTs as a perpetual, because essentially all you need for a perpetual is a price feed and some capital backing it. And so you start to expand the possibilities for exposure, and in turn the kind of size of capital that can be onboarded into the NFT space once you start creating more kind of interesting types of synthetic instruments leveraging these indexes.
So I think for those that are listening, there's a lengthy couple of article posts on Upshot's websites detailing the indexes introduction of it, and also some of the detailed methodologies and reasoning that this was created. One of the things that you guys covered in the blog post was about liquidity capacity. And as we all know, these NFTs can be illiquid, and therefore turning these indexes into actual assets backing them can be challenging, right? And that's one of the reasons why I think synthetics and perpetuals become more of a realistic venue for people to speculate and enter and exit positions a little bit easily. But one of the things that I've always thought, I still have a question mark in my head, is the idea of rebalancing, right? Because with your indexes, you guys are rebalancing every 30 days. That could mean different assets. A weighting is being shifted around. New assets could be added, and assets could be removed. There's that there's that hand of like an admin work, if you will, that are changing things. How do you think about the centralization of of that, of someone be able to change the algorithms and updating and rebalance, and how does that affect prices of an index, and as it relate to having a perp market or your financial market built around it. Is that does that seem a little too centralized to you? What are the ways to counter that? I'm curious what your thoughts on that.
Yeah, there's an element of centralization in a lot of the kind of initial iterations of any of these like more robust aggregations of data or estimations of value. That's something we're actively trying to work on. I think at one level, kind of lower in the stack, at the appraisal level, where we're attempting to mitigate some of these centralization risks by using kind of ZKML and exploring different initiatives in the kind of ZKML world. We're working with a team called Modulus right now, who is working to adapt our models into a ZK circuit that can provide a level of assurance to people leveraging these prices that the prices that are being emitted are the result of the model that we say. It's not just some arbitrary price point that we're exposing that benefits us. And in doing that at the lower levels, you can then start to kind of move up the stack in providing this level of verifiable computation around kind of rebalancing logic, methodology construction, index price quotes, things like that. So there's inherently, as you try to create more expressive data points for such a liquid asset, there's going to initially be some level of centralization, but we're attempting to move along this decentralization spectrum as these markets scale. I think it's when the markets become larger that the need for this data to be kind of trustlessly generated and verifiable becomes more important.
Yeah, I completely agree. We're sort of in the same boat in a way, just in a much smaller scale. We have our own Oracle that we developed. We're looking at different platforms like Blur, OpenSea, and factoring in more data points and thinking about how to put this all on chain in a very gas efficient way. So we're not the one that's we're not dictating anything, but we want to make sure the community has that peace of mind that these numbers are not being updated manually or not being arbitrarily inputted by the team and whatnot, and there's that level of trust and decentralization in there. So thanks for answering that.
Yeah, I think it's important that these markets grow again, because we have like a level of both of our companies have a level of kind of staked value in the reputation of the company, in these like less tangibly financial things that add additional kind of checks and assurances that even in centralized instantiations of like exposing data, we're not going to manipulate the data. We're not going to mess with the data points, because we stand to lose significant value in sort of the hits against reputation themselves. When that honeypot becomes larger, that the kind of like reputation staked or similarly staked forms of non-financial backing become less viable protections.
Yeah, that's incredibly interesting. I wonder if there is some sort of future iterations of how these data are being computed and processed and being brought on chain. If there's like a validator or node operators type of role where you have optimistic proof of stake type of model deployed in there, where if you're violating certain rules and if it should be slashed, and if you're doing it correctly, you can be rewarded. I think there's a lot of different execution model that could be explored as these things progress. Later on, I think we're quite early in the tech environment for that to happen.
Yeah, definitely. I think there's a pretty wide open design space. It's a fundamentally difficult problem to solve. This notion of consensus or trustlessness in the face of such subjective kind of endeavors, but I think it becomes important, and a lot of progress begins to be made as these markets scale. We're still like in the very early innings of the DeFi X NFT world.
Yeah, absolutely. Nick, you've been incredibly generous with us with your time. I wanted to just kind of give you a quick shout. Like you've done such an incredible job with Upshot. We have a lot of respect for you guys and what you've done for the space. Is there anything that I've missed that we should have covered? Things that people should be looking forward towards that are following you guys?
No, I think we covered it. I think in the coming kind of weeks and months, we'll be starting to release a lot more information and launching a lot more of these products that are kind of directly at the intersection of DeFi and NFTs, deploying more kind of on-chain protocols and different kind of primitives that are directly powered by the pricing layer that we've built. So just keep an eye out for that kind of stuff.
All right. Thank you for coming on, everyone. Follow Nick on Twitter. His Twitter ID is at Nick_Emmons. That's EMMONS. And also follow Upshot at Upshot HQ on Twitter. Nick, thanks again for coming on. Appreciate your time. I'll talk to you soon.
Yeah, thanks for having me. Great.
Thank you for tuning in to Look at My JPEG podcast. If you're listening on Spotify or Apple Podcasts, wherever you get your audio podcast from, give us a like, a subscribe if you like the content, and we'll see you in the next episode.